Hello. I wanted to put together a video, and it would be something that is basic business information. Now, of course, this is not for businesses alone, because I want consumers to understand how things kind of work. So this is a very high level look at it. We're going to be doing several videos in regards to our economy, our business practices, and expectations. So during this video, my goal is to help all of society to understand what happens in a business, why it seems some things are so expensive, and it appears to many how businesses are making massive profits. And honestly, some of them are. This video is not designed to provide any kind of a business education, legal advice, nor accounting advice. This video will provide information regarding our business environment across the United States. Some information may not apply to your local laws or tax structures. I am presenting this with the understanding of Washington State information. Please keep in mind this video is only basic and general information that I want to get people to think. I will be creating additional videos for different sections that are in this video. It's going to cover things in greater detail. So to start off, I want to talk about business basics. So in all businesses, there are all kinds of common areas. I will cover some of these at a very high level, but right now I want to cover four main areas that are general in nature that would apply to most every business. We'll dig into each category as the slides continue. So the first thing I want to talk about is the selling of products and services. I cannot think of any business that does not fall in this category, because this includes most every business type that I have ever seen. Every business offers a product like building materials, electricity, legal advice, just to name a few. Again, I am going to dig into this a little bit deeper later in this video. The next thing every business has is the understanding that to be able to provide these products and services, such as the building materials, electricity, legal advice, they have to also have a pricing mechanism. So most businesses have some type of markup system, because every business has to make a profit to be able to pay their bills, their personal bills, as well as all the business expenses. Each product or service will have some sort of margin intended to cover things like employees, taxes, building costs, insurance, etc. So with all of these things, we have to understand that the consumer is paying for these items: the building, the staff, the products, the taxes, etc. One of the next things that we have is it's pronounced as COGS, but it's known as cost of goods sold. So this is really an accounting term. It's a standard term, and it's designed to maintain a standardized method to include standard cost of sales. Again, I'm going to cover this in greater detail later. Another thing that is part of a business is, of course, their staffing and their overhead. Employees have a huge impact on the cost of services provided. In many cases, employee cost maintains a higher percentage cost of sales, cost compared to sales ratio, than any other expense. Other expenses that a business may incur, of course, are the building costs, utilities. So the other thing that I wanted to go ahead and do is I want to make sure that we understand one thing about staffing and overhead. Even though that, most businesses have to have an employee, unless it's a small business with only the owner. Not every business has to have a building, but there is some type of expense. If you don't have a building, that means you normally go to the client. So that means all your vehicle cost. And there's taxes on vehicles, on gas, on property. So there's taxes everywhere. So now that we kind of understand just the very high overview of what it is in a business and how a business is basically structured, I want to start digging into each one separately. So the first thing I want to talk about is the sales side of things. So as I mentioned, you have a service and a product-based type of business models that are out there. So I'm going to talk about the product base first. Now, in many of the product-based businesses, they're a retail or a manufacturing. Many of the retail businesses may also provide services along with the products they sell. A good example of a mix with products and service is an automotive repair company. They may sell you the spark plugs, and then they'll charge you the labor to put it in. Now, businesses that provide physical items that are purchased utilize the COGS information I was talking about, the cost of goods sold. The product-based company either builds a component from raw materials or purchases products from a wholesaler or manufacturer. These businesses will add a percentage to the cost, which is called a markup, and this becomes the retail price that the customer pays. The next type of business that I'm going to give some information on is service-based. Now, service-based do not normally have a retail store where you come in, you pick up something, and you purchase it. But they're normally things like attorneys or consultants. In other words, when you look at a service-based company, such as an attorney, the customer is provided a non-tangible item in many cases, such as information or a consultation. Now, they may provide like a legal document, which can seem tangible, but the information that is on that document is from knowledge and certifications and training. Service-based companies normally have a higher employee cost due to knowledge and expertise that is required to be able to be a service-based company. The next thing about sales is there is an income that comes in, or a revenue. Now, this comes from the monetary transaction from products or services provided by the company. Gross sales includes all income before any expenses are subtracted. Net income, however, is the money that's left after paying business expenses. It is also known as a profit for the company. So to get income, I talked about that there is these product-based and the service-based companies, but they all have to have something called pricing. So they have a pricing mechanism that they use. Pricing is where many companies are different, and in many cases explains why a generic brand of a product costs less than a name brand. To start off, let's look at the old school way of creating a pricing mechanism. It's a calculation. calculation pricing, in many cases, are the most equitable method I have found. There is a caveat. The calculation and the numbers that are put in that calculation must be fair, which is not always the case. I will not be able to cover in great deal in this video. However, we'll create videos in greater detail later. For now, let's understand how many use the calculation method of pricing. First, you have to determine what your expenses are. And if a product or service based company doesn't know this, it becomes an estimation, which is where some of the problems come in with inaccurate information. In general, a product-based company may have a 30% markup on most products. A higher percentage on small ticket items just because of the other expenses. This margin is used to cover building expenses, shipping, taxes, staff, insurance, and many other expenses. In some cases, the overhead expense require a higher markup just to break even. Now, another pricing mechanism is based on the local companies, which provide the same or similar product and service. In my personal opinion, this is the first step to greedy pricing structures. Please understand, there are many times this is good for the customer as well. Let me explain what I'm talking about. If a company wants to charge a 50% markup, but the competitors have only got a 30% markup, they will either have to lower their prices to compete or attempt to sell their product or service as far better than the other offerings in the area. And this is done through advertising. And I'm not going to cover a lot in advertising today, but advertising is a manipulation of facts to get the consumer to purchase their product over a different brand. Now, is the competitor pricing mechanism, if you will, good or bad? I think it really still depends on the actual business owner or manager. So I think this is where it's important to have a good business sense when creating a marketing and pricing structure. Now, one of them, the last one I'm going to talk about, is known as a market value, what the market will bear. Now, marketing pricing can be explained as what the market will bear, or even what a customer has been willing to pay for product or services in the past. Now, this mechanism is normally done and used by large businesses. One of the reasons that I feel this is true is they have a lot of clout. It allows them to negotiate lower prices, which they call a quantity discount or a volume discount. So their overhead is less for the cost of goods. But I do find that this is the most abusive to customers. In many of my findings, 2 or 3 large companies that control a service, such as specialty items like medical supplies or shipping, seem to get together and they market and calculate their retail price very similar to each other. And then they hope that their name brand is going to get people to use their service over their competitors. Now, I'm not saying this is what they call price fixing, but I find it amazing that you can go in the shipping world and look at all the major shippers, and you'll find that their prices are very close. But yet, their profit margins are huge. So that tells me that they're fixing the price because they don't need to charge that much. Now, that's not what this video is on. So I am not going to go any deeper on that now, but I will plan on doing other videos. So now that we've talked about pricing, and I've talked about what the COGS are, so now we got to talk about, okay, now you have the pricing information. Now let's talk about cost of goods. So to kind of give you an understanding about what COGS really consist of, in general, it is compiled expenses required to provide a product to the customer. This calculation may have variables that cause a different retail price, and the calculations are based on elevated numbers. Now, of course, COGS is an accounting firm, like I mentioned earlier. It is a standard. Now, some of the expenses that are included in the COGS are the materials, the shipping, but now understand that these numbers can be manipulated too. You see, we see some of the large companies out there having multiple companies that all work together. And so what they do is they share this expense, so to speak, across many. And then they say that their overhead is a lot higher, and that's why they charge what they do. There is a lot of manipulation that goes into many business standards. So I kind of mentioned already some of the things that are included in the cost of goods, but I want to give a little more detail. So these expenses can include direct labor to produce the product. In other words, in manufacturing, the people that are running the machines is a direct labor. The materials used by those machinists to produce a marketable item. So of course, if you have employees, you have payroll taxes and employee benefits. You have your building costs. You have the transportation for the raw material or the sellable items. The shipping costs. And in many cases, the majority of the businesses use these items as the calculation for COGS. So to kind of reiterate here, we have staffing and benefits, we have materials, we have building costs, and we have shipping. Now, some of these things that I've mentioned in this cost of goods is what's called overhead. Now, there are several facets to the overhead expense, but I'm only going to talk about 3 of them right now. One of them is the building, which I talked about in the last slide. So building cost is pretty self-explanatory. However, I want to focus on the needs and return on investment for clients with regard to overhead. Building costs vary greatly across the United States. But here is the information I want to express. Unless the business owns the building, this cost can fluctuate with very high percentages and can make a company profitable or unprofitable very quickly. The items that affect the cost of the building include property taxes, the building mortgage insurance, and in many cases, the market pricing. In other words, what are other buildings and spaces leasing for? Due to these facts, building costs are mainly set based on the market pricing, or what the market will bear. It seems that if a building owner feels a business is doing well in their location, that it is due to the location, and diminish the possibility that the business management and their pricing structure are the factors to their success. So the things that are out of control with the building is the property taxes and the interest. Some companies are on a ARM or adjustable rate mortgage, and so it can go up and down pretty substantially. But the biggest problem with buildings is the artificial inflation that happens in properties. You see, if it is a business location structure that is the exact same size as a house that you would live in, and most every place that I've looked, which is not everywhere of course, I have found at least a 50% surcharge on the price because it is a business location. So the next thing part about overhead, moving off of the building, is employees. Now, this part of the overhead is difficult to manage, since that minimum wage dictates how much your expense is going to be. And the wage that an employee is paid dictates the taxes and the insurance cost, basically your employee expenses, dollars. I have not found a company that has ever been able to use 100% utilization of an employee, or better known as 100% billable hours for each hour that the employee works. This is true for product-based companies and service. Now there is one thing that's different with regard to employees. These large companies that have the checkout lines, they do get probably close to 90% utilization of their employees, but that's because there's lines. And as soon as one customer's been checked out, they have another one coming in. But smaller businesses or service-related businesses will not be able to get 100% utilization. I believe that the average is going to be somewhere near 50%. So another part of the overhead is taxes. Again, taxes and the cost of taxes are generally out of the business management's hands. They can't do anything about it. In some cases, business taxes are based on gross sales, which I talked about earlier. I will not bore you with all of the calculations. However, to put this in perspective, if a company has a 50% markup, just to keep it simple, the tax is based on that 50% markup, which of course the business gets a benefit from. But it also includes the cost of the product, which the company does not receive a benefit. It is an actual expense to the company. But yet, their business taxes are based on 100% of what you sold a product for. So let's understand that if a business does not receive any financial benefit from the cost of the product, the 50% of that sale, and yet pays business taxes on the amount, this changes the percentage of taxes paid by the company based on what they actually have as a gross income. I'm sorry, a net income. So the business taxes and the property taxes on the building are the two things that are out of a person's control completely. The employee cost is out of control for taxes because it's based on what the employee is paid, and what the employee is paid in a lot of cases are dictated by what the government says. Now, of course, I'm not somebody advocating paying everybody minimum wage. However, to keep this in perspective, I'm going to cover this in greater detail later, but if a person that is making minimum wage and they increase the minimum wage by a fair percentage, they are now in the median of the middle class. Now, if they're in that median, and now you give those minimum wage earners that much of a pay raise, you now have to give everybody that same level of pay raise to keep everybody at their same level and lifestyle. Again, I'm going to cover that in greater detail towards the end of this video. But now let's talk about cash flow, because I think that this is where that what I just said is going to come into full focus. So in Seattle, Washington, they went from just under $12 an hour for an employee to a $15 minimum wage. If an employee is working 40 hours a week and was making minimum wage, that is an additional $120 a week that the company has to make profit just to keep that employee, or it's 25% increase of expense. But let's understand one thing. It's to the business, as I've already covered about the different expenses the business will have, that's not where it stops. It also increases things like delivery costs. So if somebody was paying $7.50 per sellable item, and because I mentioned about the employee taxes going up as well, I actually saw an increase of 30%, or $22.50 per week. Now, of course, that's not the only thing that goes up. So now the wholesale price is going to go up 25% as well. Now, one of the reasons why I think that this did not make as much of a jump is because they require their employees to do more, and they probably cut their hours. I don't know that to be fact, but this is about what I saw. So that's $625 a week increase. Now, to put this in true perspective for everyone, I don't think anybody can take this kind of a hit without changing their lifestyle or the pricing structure that they're offering, because that total cost is $767.50. So people may think that it's never going to hurt a company. It's easy. They're just rich. But I wanted to point out that this is a huge impact on people. And this is why we've seen a decrease in small businesses. So the total cost change for a business under this scenario for 10 products a week has a $767.50 additional expense due to minimum wage imposed by the state government. I don't know anybody that can easily make that up. That expenses is a huge hit to the bottom line. So, I'm going to conclude this video, but I want to kind of go over just some of the parts of the video. First of all, I covered the basic information about businesses, the structure, and the different types of structures that's out there and how they're put together. Terms. We have covered some of the terms, like cost of goods or COGS. Gross profit versus net profit. And fair or unfair practices. And again, this is all high level. But I want to ensure that everybody understands that things need to be fair and they need to be honest. And so I want to be fair and honest for what I see and what's going on. Many small businesses are struggling right now, mainly at the hands of government and other large businesses. So I say help the small business. We have to help the small business. I'd like to thank you for watching. Please share the video. Come back because I'm going to be doing some additional videos that are related to these type of subjects, but are going to be in greater detail. And I think the consumers are the ones that's going to be shocked more than anybody else. Let me know if you find this helpful. And please remember, our goal is to keep things simple, provide education to people. Thank you very much for watching.